Hello everyone, I'm going to show you guys how to trade the silver bullet. So currently I am in a trade on the NASDAQ. I'm looking for price to kick up into the buy side liquidity resting above here. So I do have this 30-second fair value gap marked out. I am going to put my stop below candle number 2 of the fair value gap. We're looking for price to kick up into this high first. This is going to be a first partial, and then I'm going to take the rest of the position off around these highs right up here. Okay, so that's the draw on liquidity at the moment. I'm thinking that these relative equal lows are going to stay intact. So why am I using this specific gap? Well, there's two reasons. This is a silver bullet trade where basically when price taps into a fair value gap, I'm just longing that fair value gap, and then I'm targeting liquidity resting above. So we have the buy stops resting above here. We have two levels of buy stops resting above there. Okay, so there's two main reasons why I'm taking this trade. Number one, the draw on liquidity is higher on the 15-minute time frame. So if we look at the 15-minute, you could see this is the 10 o'clock candle. We had a big, large range candle right here. Price comes back down at 10:30. Retest that. Okay, so you see this huge wick on the sell side liquidity. That's already feedback to me that smart money's buying those sell stops. And then we get this next candle immediately trade down to the midpoint of this wick, which ICT calls consequent encroachment, or the CE of a wick. It's the midpoint of a wick, and wicks are gaps. So the fact that this next candle right here at 10:45 retests that midpoint and then turns into an open low high and close candle shows me that the draw on liquidity is bullish. Now you can see price is delivering to the first level of buy side liquidity that is at 20,633.25. Just tapped it so far. But you can see that real respection of that midpoint of that wick. Now wicks are gaps, so ICT looks at the midpoint of a gap, which is like a fair value gap. Like you can see on the 30-second time frame, you'll notice right here I do have the midpoint of that labeled out. I do like to label out the midpoint of fair value gaps and also wicks. Those are important to me. See, that did set relative equal highs right here. I'm just looking at this as engineering liquidity. So I think that this specific down close candle can start to propel us back to the upside. So I'm going to mark that out now. Okay, this is a bullish order block. You don't see a gap next to it, but on the lower time frame there is a gap. So I want to see it kick up with speed here, reaching quickly for that 11-12 high. Okay, so order flow is bullish in my opinion. So it did two things right here. It came back down to grab these stops that anyone trailed too quickly, and then also it returned back into this order block right here. Okay, so the main reason is that we have the 15-minute draw on liquidity that is higher. That's number one. Draw on liquidity is number one. And there is a reason why that draw on liquidity should play out, in my opinion. So if you look at the 15-minute time frame, look at all these stops. Okay, so price returns back lower, takes out all the stops. We have multiple drives lower. So we have one, takes out the stops here, takes out the stops again. I'll draw little lines right here. So it takes out the sell stops, takes out the sell stops, takes out the sell stops. So we have three drives lower. It's also taking out all the liquidity resting over here. Okay, so the narrative is anyone long got stopped out. Those stops become sell orders into the marketplace. Smart money buys those sell orders, and now it's displacing back in the opposite direction. Okay, so that's the idea here, that anyone long that got in long too quickly got stopped out. Now they're running it back on the people who went short with the buy stops resting above here. Okay, so you can see that clean respection of that order block on the 30-second that we were talking about. Okay, I want to see within the next three candles, I want to see it rip in. I don't want to see this order block respected. So within the next couple candles, I want to see speed over this high. So there's the first high. Now here I want to see it kick up into here. And I'll just take two off above this previous high, just because it's a high resistance liquidity run today. So I'm going to remove some of the stuff on the chart, and I'll show you guys what a high resistance liquidity run looks like. Price takes out an old low. So we have this old low of sell side liquidity over here. In a high resistance liquidity run, let's say the draw on liquidity, you think it's down here. In a high resistance liquidity run, it'll take out that old low, and then there'll be a deep retrace back to a deep premium, or it could just retrace back into this order block. But you see we have it multiple times. It gets close to where you think price is going to go, then it just runs back in the opposite direction. In these type of conditions, I don't want to be too greedy with my exit. So I took one partial off at this previous high. Okay, we have one off here, and I do think it's going to kick up into this high, but I'm just taking it off at that 20,640 level just because why not, right? It's just a few extra points. In my mind, if I can identify a high resistance liquidity run, why try and get a few extra points when it could just take out this previous high right here and then just run all the way back against me? So it just makes more sense to just take off at the easy target. If you guys would like to see more content from me, I have a Discord community where I share ideas every single day on where I believe the market is drawing towards with a high level of accuracy and precision. So if you guys are interested in that, there's a 3-day free trial, the first link down below. So I'll post things like this. I'll post the S&P 500, NASDAQ, Dow Jones, and I'll post where I believe the market is drawing towards based on ICT concepts. There's also a whole library of videos in here explaining ICT concepts, and also 3 little courses in here where I walk you through how to trade ICT concepts from beginner to advanced. So if that's something, again, you guys are interested in, you can check out that link down below. So if I'm looking at the 30-second here, I think it could potentially still dig back into this order block. That's a possibility, but I don't want to see it take out this order block low right here. Okay, I want to see this general area in here start to kick price back up higher. So really this new order block that we have right here, this is an area where I want to see it start to quickly reach back up for a new high. So ideally, I don't even want to see that 20,622.50 low get hit. I just want to start to see expansion up higher, reach for this high, then speed above this high into the buy side liquidity resting above that. So again, the original idea for this trade is the 30-second gap at 1103. If you want to go back and back test it, it's July 8th, 30-second candle, 1103. You can see it beautifully is starting to reach back up for that previous high, retested that order block that we talked about. Here's where I want to see speed over this high. I don't want to see it pause at this point. Okay, so ideally, I'd like to see this gap remain open on the 30-second, and I want to see it kick into that buy side right into that area where we were talking about. There we go. Price just beautifully delivered right to that buy side target. So that was beautiful price delivery. I will do a little recap of this. You can see I did take another long down here at that CE of the wick that I was referring to that was important. Took out the sell stops, respected the CE of the wick on the 15-minute time frame. Okay, took a long up here, just targeted these relative equal highs, and then took the silver bullet trade up in here. So number one, the draw on liquidity was higher. I had the bias that price was going to reach for the buy side liquidity resting here. You arrive at a bias once you can understand the narrative. If we look at the 15-minute time frame, the narrative was it was running back on London lows over in here. Okay, 3 drives lower, so it was clearly they did not want to send it down lower, as price just kept on running for sell stops, popping up, running for sell stops, popping up. So once it did that 3 times, and then it started to displace up and created a change in the state delivery on the 30-second time frame, this is already an indication to me that price can start reaching for the liquidity resting above. Okay, so respects the C of the wick. This is the first trade. The second trade, okay, once price is already displacing, it already did the damage down here by rebalancing any inefficiencies in this price leg. Okay, once that failure swing is in and it dug into the order block, this is where it can leave breakaway gaps. Okay, once it already did the damage, digging lower, rebalanced all the inefficiencies, once it starts to expand higher with speed, I'm looking for there not to be such a deep retrace as prices repricing higher. So this is where silver bullets can form multiple respects of this bullish fair value gap. This is where I'm entering in the silver bullet trade. This is candle number 1. So just to dumb it down real quick, this is candle number 1, 2, and 3 of the fair value gap. I believe I put my stop beneath candle number 2, which is this 1103 low. Okay, and then we're entering in this wick. Okay, price starts to expand right away after the entry, and that's how it should be if you're trading in line with smart money. Okay, expands higher, retest the order block again. Okay, and I walked you guys through order flow live as this was playing out. So to make it as simple as possible, a silver bullet is a fair value gap the price can key off of and deliver to liquidity, and that's what we have right in here. So the draw on liquidity was higher. The narrative was that smart money took out sell orders, bought the sell orders, then it was delivering to the other side of the range. Okay, so it goes from sell stops to buy stops to sell stops. And that's going to be it for this trade review. If you guys want to see more videos like this, make sure you drop a thumbs up, and I'll see you guys later.